Today, I'll be going over 3 stocks for Canadian investors. And you can definitely put these on your watch list as well if you're a beginner. Now, just a little disclaimer, and just like with any investment, always do your own research before you jump into it. If you're new to my channel, then welcome. My name is Jason, and here you'll find videos on personal finance, investing, and money related topics. And if you find any of that interesting, be sure to hit the subscribe button down below so you don't miss out on future content. And also, if you're excited for today's video, be sure to hit the thumbs up button because it does help with the YouTube algorithm and it also does help support the channel. And with that being said, let's jump right into my computer and go over these 3 stocks. Also, keep in mind, if you want me to do a full stock analysis on either one of these, be sure to leave a comment down below so that I know to do a video on that. Because today, I'll just be briefly going over how they're doing over the long run and what they're up to currently or in the future. Okay, so the first stock that we're going to look at is Manulife Financial. Now, Manulife Financial is a Canadian multinational insurance company and a financial services provider. They are headquartered in Toronto, Ontario, Canada. And in Canada and Asia, the company operates as Manulife, and in the US, they operate primarily through its John Hancock Financial Division. And if we take a look at Manulife's year-to-date chart, you can see here near the end of January, the stock was trading at $27.71. And when the pandemic was at its worst, the stock dipped down to $12.97, which was the lowest, which dropped about 53%. And since then, the company has rebounded and increased about 50%. And if we take a look at the overall picture of the chart, you can see here since 2012, the stock was steadily increasing year over year, up until the pandemic hit this year. And currently, Manulife Financial has a market cap of $37.684 billion. And they have a beta of 1.15 and their PE ratio sitting at 8.35. And looking at the 52-week range, the lowest price that this stock has seen is $12.58, and the highest peak that it's seen is $27.78. And Manulife does pay a nice dividend of 5.95%. So if you're planning on investing into Manulife for the long run, this is definitely the stock for you, especially when you get dividends like that. And if we take a look at the earnings, you can see here in Q1 of 2020, they missed their earnings, but recently in Q2 of 2020, they actually beat their earnings. And I'll actually go over the highlights of their Q2 press release later on in the video. And looking at their annual financials, you can see here in 2019, they had a record high. And if we take a look at their quarterly financials, Q4 of 2019 did dip down quite a bit, but they've slowly recouped in Q1 of 2020. And taking a look at the recommended rating by the analysts, currently it's sitting at a 2, which is a buy. And looking at the analyst price targets, their average is about $23.37, and currently the stock is sitting at $19.43. And Manulife's PEG ratio is currently at 2.88, and their price to book ratio is at 0.74. And taking a look at the profit margin, currently they're at 5.73%, and their return on equity is 8.33%. And taking a look at Manulife Financial's dividend summary, their payout ratio is currently at 43.08%, and their 5-year growth rate is 7.79%. And they've been consistently growing their dividends for the last 4 years. Okay, if we take a look at Manulife's earnings highlights for Q2 of 2020, so looking at the net income, which was $727 million, this is actually down 52% year over year. And taking a look at the core earnings, which is up 5% from Q2 of 2019 and sitting at $1.6 billion. And the core ROE isn't too much of a difference from Q2 of 2019, where currently it's at 12.2%. And taking a look at the LICAT ratio, this has actually increased by 11% to 155%. Now the LICAT, the life insurance capital adequacy test, and this pretty much assesses whether or not a life insurer maintains adequate capital or an adequate margin to support risks specific to the life insurance business. And the book value per share has also increased by 10% to $25.14. And Manulife has also improved their expense ratio by 3.6%, dropping it down to 48.9% compared to Q2 of 2019. And according to analysts, the average 12-month price target of Manulife is $22.90. So my overall opinion on Manulife Financial, in my opinion, this is a low-risk stock. And considering Manulife is actually trading at a discount currently, compared to what the analysts are suggesting the price should be, in the long run, I do see lots of potential within this company. And obviously it won't happen overnight, but in the meantime, the shareholders can definitely take advantage of the dividend that this company pays. Okay, so next up is Enbridge. Now, Enbridge is a Canadian multinational energy transportation company based out of Calgary, Alberta, and it focuses on the transportation, distribution, and generation of energy, primarily in North America. Now, if you pull up the year-to-date chart for Enbridge, you can see here mid-February, the stock peaked at $57.13. And during the midst of the pandemic, Enbridge saw a decline of about 40%. And since then, the stock has recovered about 29%. Now, if you take a look at the overall chart for Enbridge, you can see here that it's consistently gaining year over year, other than the fact that it dipped around in 2015 and then again around 2018 before it started climbing back up, and then unfortunately the pandemic hit. And taking a look at the market cap for Enbridge, currently they're at $89.149 billion, and their beta is sitting at 0.95 with a PE ratio of 46.83. And if we take a look at the 52-week range for Enbridge, the lowest the price has been is $33.06, and the highest they've peaked at is $57.32. And Enbridge also pays a dividend, which actually is a really good dividend of 7.42%. And if we take a look at their earnings, you can see here Q1 of 2020 and Q2 of 2020, they beat the expectations. And if you take a look at their annual financials, you can see here that year over year, they've been consistently growing. And looking at their quarterly financials, you can see here in Q1 of 2020, their earnings actually became negative. But in Q2 of 2020, their earnings are back up around the $2 billion mark. And looking at what analysts rate this stock, currently, they rate it at 2, which is a buy. And the analyst price target for Enbridge is the average of $51.73, where currently the stock is sitting at $44.02. And looking at Enbridge's PEG ratio, currently they're at 2.65, and their price to book ratio is at 1.51. Enbridge currently has a profit margin of 5.23% and a return on equity of 3.34%. And taking a look at Enbridge's dividend summary, currently their payout ratio is pretty crazy, sitting at 124.16%. And their 5-year growth rate is at 0.84%, and they've been consistently growing their dividends for the last 2 years. So let's jump into the Q2 highlights of Enbridge, and here you can see their highlights consist of 4 main things. Number 1 is robust response to COVID-19 ongoing. Number 2 is strong Q2 business performance. Number 3 is preserving financial strength. Number 4 is progress on strategic priorities. And right next to it, you can see where they're at with each of those highlights. And taking a look at Enbridge's 2020 mid-year checkpoint, it consists of 6 priorities. Number 1 is safety and operational reliability. Number 2 is financial position. Number 3 is optimize the base business. Number 4 is financial performance. Number 5 is execute secured capital program. And number 6 is disciplined capital allocation. And again, right next to it, you can see the year-to-date progress of each of these priorities. And if we dive into their second quarter financials, then you can see here that their net income actually slipped down to $1.65 billion in the second quarter on a 40% drop in revenues due to lower crude oil prices. And that's obviously caused by the COVID pandemic and the OPEC price war. And they are down about 82 cents per share for the 3 months ended June 30th. And a year earlier, they're sitting at 86 cents per share, equivalent to $1.74 billion. And their adjusted profit came in at $1.13 billion, or 56 cents per share. And if you compare that to the second quarter of 2019, which it was $1.35 billion, or 67 cents per share, revenues have obviously plunged, going from $13.3 billion to $8 billion. And Enbridge has reaffirmed its cash flow guidance for 2020 as they anticipate a gradual recovery in demand as travel and border restrictions are lifted. So my overall thought on Enbridge is that despite the company going through a troubled time, and looking at the overall company and the global energy picture, these issues that Enbridge is currently facing are not as big. And for those long-term investors that are invested in Enbridge, can definitely enjoy that 7.42% dividend during these uncertainty times. Okay, last but not least on the list, we've got Brookfield Infrastructure Partners. And this company is headquartered in Toronto, Canada, and they engage in acquisition and management of infrastructure assets on a global basis. And if you take a look at Brookfield Infrastructure's year-to-date chart, you can see here their peak price was $67.22. And when the pandemic hit, they saw a decline of about 48%. But since then, like everything else, they have recovered about 63%. And if you take a look at the overall chart for Brookfield Infrastructure, and you can see here that year over year, they've been consistently going up. And obviously the major downfall was the pandemic that we're in right now. So I have no doubt in my mind that once all of this is over, this company will continue to grow year over year. And if we take a look at their 52-week range, the lowest this company has been is $23.01, and they've peaked at $50.28. And Brookfield Infrastructure has a market cap of $12.732 billion, with a beta sitting at 0.93, and their PE ratio is at 182.88. And just like Manulife and Enbridge, Brookfield Infrastructure also pays a dividend of 4.63%. And taking a look at the earnings, you can see here that since Q3 of 2019, they've been missing their earnings. And moving over to their annual financials, here you can see year over year, they've been consistently growing their revenue. And looking at the quarterly financials, and you can see here, pretty much all of 2019, their revenue stayed consistent. And Q1 of 2020, it hit about $2.2 billion. And from an analyst point of view, their recommended rating for Brookfield Infrastructure is 2.3, which is a buy. And the analyst price target is currently sitting at $47.62, whereas the current share price is sitting at $43.16. And currently, Brookfield Infrastructure does not have a PEG ratio, but their price to book ratio is at 2.54. And looking at their profit margin, currently they're at 1.53, and their return on equity is 3.58%. And taking a look at Brookfield Infrastructure's dividend summary, their payout ratio is pretty crazy right now as well, sitting at 194.51%. And their 5-year growth rate is 9.45%, and they've been growing their dividends consistently for the last 12 years. Let's move on to their financials and see what's going on. So taking a look at their funds from operations, you can see here Q2 of 2020, they're sitting at $333 million, and you compare that to the Q2 quarter of 2019, they're at $337 million. Now, taking into consideration the situation that we're currently in with the pandemic, that's actually not that bad. And if you take a look at their funds from operations per unit, Q2 of 2020, they were sitting at 72 cents. And the same quarter in 2019, they were at 76 cents. And the largest impact on their quarterly results was from a 27% decline, primarily from the Brazilian real, which reduced their funds from operations by $30 million. Compared to the prior year. Brookfield Infrastructure's funds from operations from their utilities declined by 9.1% year over year. And looking at their transport funds from operations, dropped as well by 20% in the quarter. But looking at their energy funds from operations, it actually jumped 10.4%. Here you can see their Q2 2020 highlights from their operations, business development, and the financing and liquidity section. Now, my overall thought on Brookfield Infrastructures is that over the long run, the company will continue to do better and better, but obviously with the volatility in the energy markets this year, the company is looking to buy stable cash flowing assets. And with that being said, guys, I hope you enjoyed today's video. If you made it this far, make sure to hit the thumbs up button because that lets me know that you've enjoyed today's video. If you haven't yet or you're new to the channel, be sure to hit the red button down below. And on that note, I'll see you guys on the next video.